Welcome. I'm here with Peter Kolaczynski, Associate Director of Commercial Edge. We'll have him explain what that means at Yardi. He's been in this role for, Peter, almost 13 years, according to
Yeah,
your
been with
your
Yardi now for
LinkedIn.
13 years. Yeah.
That's like an eternity. Okay, but we have to cover first. I reached out to you because I was reading the recent report that Yardi put out, and we'll talk about the extensive data that you have and the content that you're making available, which is really helpful for the industry. But I looked at your LinkedIn and we have an undergrad in common, which is very unusual. I rarely meet people from Ithaca College. So tell me, where did you grow up and how did you end up at undergrad in Ithaca and now in
Yes.
Scottsdale?
Yeah. Yeah. So I'm from Buffalo, New York, actually.
Oh,
And yep,
upstate New York.
upstate New
Okay.
York. And my mother went to Ithaca College. And then,
Wow.
yeah, so I'm a legacy Ithaca
Okay.
College grad. But it's a beautiful spot, more so in the summer, opposite
Yeah.
what I have now in Arizona. But
Yeah.
it was a great experience. Love Ithaca. Haven't been
Okay.
back in a while, but it's
And then you
awesome.
were like, I'm out. I'm done with winter. Did you go straight to Scottsdale or?
Yeah, yeah, yeah.
Okay.
Yeah. So I was in New York City, brief stop in New York City in 2007, not where you wanted to be. And
Oh,
then I was like,
yeah.
we're gonna go to Arizona. Family had moved out here and I
Okay.
had been out here since. So
Okay.
20 years now.
Yeah, let's not. You're a little younger than I am. I won't tell you like what reunion just passed for me. So I grew up between Syracuse and Binghamton in a
Okay.
town with no stoplights. So Ithaca was not that far from home. I do remember going through the college brochures and seeing one for, shoot, I'm going to forget the name of it. It's in LA. Pepperdine. And I was like,
Not
I'm going
Ithaca.
there.
Yeah.
I'm done with winter. And somehow I ended up in Ithaca and then in Chicago. So I don't blame you for being in Scottsdale. Yeah,
It's great though. Ithaca's great place.
totally. Yeah. Okay. So you studied sport management, but it looks like
Sport
you've been
business management, yeah.
okay. Okay. So kind of businessy stuff. So how did you, I just have to ask you, you're a little bit about your background so we can
Sure,
seg into what are you doing now? So,
sure.
I mean, you spent a lot of time with data now, but can you tell us about your career at Yardi and kind of what that's looked like and what your roles have been?
Yeah, so back when I moved to Arizona, I was working with a company that Yardi acquired in 2013, was focusing on multifamily data at the time and had been doing that for 6 or so years. And then Yardi acquired that company in 2013 and had been working with Yardi since then. And it's been an awesome journey watching the growth and getting involved in more and more stuff commercial since about 2014. So
Okay.
focusing now it's all commercial data all the time. That's what we do. So I'm in charge of the effort of collecting commercial data, and then obviously co-working has been more of a focus the last 5 or so years for us. So
Which I love to hear. And you mentioned, you kind of think that's where Office is going because you were at the GWA conference. I had the honor of interviewing Anant, who is a lovely man. I did not know much about Yardi, and I think that sort of experience and conversation really changed my, like, maybe not changed, but just really kind of augmented my goodwill for Yardi. I knew the One Systems guys,
yeah,
Dale and yeah, Warren and the team because through an acquisition, but they were
uh-huh.
so active in the industry. But I didn't know much about the company. And Anant is just like as good as they get, it seems to me. Just so smart, but humble and
Yeah.
like a real
As
guy.
excellent as a businessman, great person too. So
Yeah.
it's one of the reasons I'm still here, and he's an awesome boss to work for
Yeah.
and leader of the organization. So
Wait, did they ever try to pull you into Santa Barbara? Because that's where most of the company is,
we're
right?
Yardi's everywhere.
Pretty
Yardi's
distributed.
yeah. There's maybe 40 offices or something like that. So there's a
Yeah.
lot of different offices across the world now.
Yeah. Well, I think Yardi is unusual in our industry because our industry is so small, which we'll talk about a little bit in the numbers. And Yardi is a giant player in multifamily, commercial, I mean, every sort of real
Mhm.
estate corner. So when you say commercial, just for anybody listening who doesn't sort of, speak the lingo, can you just cover what commercial would include besides office?
Sure. For us, it's office, industrial, and then retail. And the primary focus has been on office and industrial
Yeah.
for the most part for the last, I'd say, like 7 or so years.
Yeah. And industrial is another hot kind of segment because Amazon.
Sure, right?
Although, and does industrial include data centers
It
too?
does. It
Yeah.
does. So for us, it includes data centers, and that's something we've been watching closely with
Yeah.
the construction, the significant uptick, and it's real regional, but it's been a big push, ever since I'd say post COVID and the rush up on warehouse and distribution.
Okay, cool. Well, you sort of stumbled into some like sexy growth segments
It's
that
been
maybe,
fun. It's fun.
yeah.
It's fun stuff.
Well, good. I'm glad that you and so you publish this report quarterly. And for anybody listening, we'll put the links in the show notes. Anybody who's listening who is interested in data, and I love doing podcasts because I know how I try to read things, but also I'm such an audio person. I don't read as much as I listen. So it'll be fun to kind of go through the highlights of this report. But Yardi's co-working cafe site, if you go I Peter, you can tell me if there's an easier way to get to it. There's a blog button in the footer, and
The
then you kind
blog.
of get to all of this great content, market studies, and other resources. How long have you been publishing the quarterly report?
Oh, it's been, I want to say a couple of years now,
Okay.
and we've been keeping track of the data, and building it up because it doesn't happen overnight. It's taken
Yeah.
a good amount of time and studies. So I'd say we started really digging into it in 22, 23, more confident with where the numbers were, and then been doing, I think, reports since the beginning of 24, but don't quote me exactly on that. But it's been a couple of years
Okay.
now.
Yeah, perfect. So there's some historical data there. You can see the growth, and the reports reference the previous quarter and, growth or contraction. So anybody looking for data for loan apps, business plans, I run a program called the Co-working Startup School, and I'm always looking for good sources. This is a good one to keep an eye on, and there's a lot of detail, by market. So that's really helpful too. So I just wanted to mention that, and we'll put the link in the show notes.
And we're working on an effort for us, and I'd say the front half of 26 is getting this out more, right? And to have more transparency and to make it more available to folks by and large. So that's one of our goals.
Yeah, I love that. And, the industry is still so new, and Yardi has so much data, which is unusual. We don't have a lot of vendors that have a lot of data. There's not a good sort of, just not a good like aggregation of data. And so I think any data that gets published it sounds like you take it seriously and you're trying to publish like what you feel really confident in is really helpful and that has any sort of scale. Because sometimes I'll see brokerage data and like the scale is just like small.
And
So,
I think what's unique for us is we started off with just the idea of, okay, we have to capture every office building in the country in 120 markets, right? And not focusing on co-working at all, right? Just every office building, who owns it, who,
okay.
what's the most recent sale, the debt, all those different, characteristics you'd see on that. And then from there it branched off into, who's the tenants are, and then really a focal point on co-working after that. But the fact that we have those 81,000 office buildings as a starting point, you can start layering more and more information on it, and come into some pretty interesting conclusions.
Fascinating. Yes, if you're nerdy, that sounds exciting.
I know I get all hyped up about it, so
Yeah,
deal with me on that.
totally. Okay, I do have a question about the data, which is so one of the, I guess it's a graph in here, not too far into the report, is number of spaces Q4 2025 versus Q3. So these numbers sort of shocked me. I mean, I know the total number, but when you look at it by market, you're like, how could that be?
Mhm.
So Chicago, for example, has Q4 at 328 spaces. How are those defined?
Yeah, so a market for us is it's county based, right?
Okay.
So it's really Chicago land. So it's not
Okay.
just,
Which is 8
downtown
million.
Chicago. Yeah,
Yeah.
exactly,
Yeah.
right? And then we get more specific, we'll say Manhattan versus like Brooklyn
Yeah.
in an area like that because it's just so different. But we look at market level, right? So Chicago land. San Francisco's not just the peninsula, that's
Yeah.
actually,
Full bay.
getting
Okay.
into the valley, yeah, versus like Santa Clara, which is like the Bay Area. So there's some discrepancy, I think, on the city versus county and market level. But we're approaching this
Yeah.
from a market perspective.
Okay. And then in terms of sort of the product that might be called a co-working space, it's I'm guessing it's not just like, oh, what I can find on Google, because I'm not sure I could find 328 spaces on
Hmm.
Google, although I haven't tried for Chicago. But is it like, well, there's an asset owner and we happen to know they have some flexible model operating in that space? Like, can you talk about that a little bit?
It can be, right? It has to be, there has to be like a brand behind it. It has to be
Okay.
a specific, focus on flexible shared co-working space, right?
Okay.
Now that there's definitely some gray area on that, but what we don't have, what what we exclude would be like just a regular sublease. Like that's not what we're
Yeah.
looking for at all, right?
Yeah.
It has to be a branded focal point on shared flexible co-working space.
Okay. Got it. That's helpful. Yeah. I mean, there was some pretty significant growth.
Yeah.
Q4 versus Q3, 5% quarter over quarter increase. I think the year might have been 15%.
15% square footage and for total number of locations.
Okay. Right.
Yep.
Also, right, helpful nuance to understand. Yeah, I had not looked at one of these reports in a while, and I was kind of digging into like, okay, let me think about what this means. So it's really helpful the way you break that down. Yeah, I mean, 15% growth is pretty exciting. The report talks about corporate occupiers. What do you think is driving that growth?
So a couple of things, right? So I think there's the education of what co-working has to offer, right? On the corporate side, there's the need for flexibility, right? And I've oscillated over I'd say post-COVID coming out, what the market looks like, where it's headed, and what's happening. And given the circumstances now, the need for flexibility, the need for an unknown working, in-person percentage. I always am tracking like physical occupancy. I think that's like an underreported stat when it comes to like vacancy in buildings. And how many people are actually showing up
The
every single day
utilization you're
to
looking
fill
at.
those buildings.
Yeah.
Yeah, physical occupancy is what
Yep.
I call it. It's less than 60% still. So, and if someone's in New York and they see New York and it's like, well, it's more than New York. It is. But you know, in Phoenix, it's not, and that's where I am. Or if you're going to other places, especially the Sun Belt, there's just less. There's less in-person activity.
But even pre-COVID, that number still would have been like 40%, right?
Physical occupancy,
Yeah. Or sorry, it would have been
90%,
on any
right?
given day?
So it was much, much higher, much
Okay.
higher. Yeah. It
Mm.
was, it's changed significantly. Yeah.
Okay.
And that's like the baseline of what the actual in-person physical occupancy is.
So if we assume some of that growth is kind of corporate occupiers looking for on-demand space, I mean, it could be a mix of needs that these co-working spaces are filling, right? It's not necessarily just like the dedicated office or the team office. It could be, that they're building larger meeting rooms or training spaces.
Sure.
Any concern about sort of the unpredictability of return to office policies and what that might do to demand or
Yeah. It's a really good question. And I was the person coming out of COVID is like everything's going to get back to normal except in-person work. You're telling me that's not going to get back to normal, and I'd say wrong on that because I thought you would see a higher percentage of people coming back to the office, and it's not the case from a corporate perspective, right? It's still much less. I think we're settling into what the expectations are. Flexible work is not going anywhere. It's here it's here, right? This is the new norm, and it's going to continue to be such. To me, the big disruptor now is AI, and I think that's what we as the industry needs to be kind of shifting and focusing on is what effects happen based off of what happens next with the AI world and the AI industry and where that's headed.
what do you think?
Good
What's your
question,
yeah,
right? So I don't know, and I'm not
you're
trying to
so
predict the
interesting.
future. I think there's the direction where mass adoption, right, and you see a less of a need for employees, right? I
Yeah,
think
so you
that
think the
is
workforce
something.
shrinks, which could impact demand. Yeah.
It's definitely possible. That's
Yeah.
one option. Another path is just compare it to computers and you do your work better, more efficiently, and it allows for steady, consistent growth. And that's probably the most likely path forward with that. And then the third option is it's more of a flame out, right? But to me, all three of those things likely lead to less office space being needed, right? As a whole. So and I look at that not from a co-working industry, from an office
Yeah.
industry, right? So
Yeah.
7 billion square feet of office space across the country. So if we say there's more space than needed, what happens with that space? And then from a co-working perspective, as a tenant, I'm looking for flexibility. I don't know
Yeah.
how many folks will be in that role or need to be in an office, regardless of where the AI track leads us. So to me, I see the office world, I see the office piece shrinking from 7 billion square feet down to less. And I see co-working increasing significantly as tenants demand, the opportunity for flexibility and just an unknown terms, right? I think that's something that will happen from an enterprise perspective.
Yeah. Users, if they have uncertainty, they prefer the flexibility, which is good for co-working. Yep. Although, let's take a moment. We talked
Mhm.
before we hit record about the terms. Can you guys talk about how you like maybe internally or what you like? I mean, because you have a stake in WeWork, which probably uses co-working. You mentioned you like serviced office, but
That's
office
me.
and yeah, okay.
Yeah,
Right.
and
We'll
I'll
put
speak for
the
myself on that, right?
disclaimer out.
And I use the term service just from a more of a building owner perspective, right? So from that owner offering space where to a corporate occupier, service space, right? And there's a void right now, right? There's more demand for enterprise space than there are corporate service spaces available, right? So to me, that's an opportunity for owners of buildings to repurpose, reposition, rebrand under a co-working moniker and a service moniker to fit the need and the expectation of those corporate tenants. And
So
that there's a lot, and there's a big opportunity there. That's where I see all of the growth happening in the next 4 or 5 years.
from the asset owner side, yeah.
Correct.
Yeah. So you have this sort of magical role because you have access to so much data. There are asset owners, people like me out there, other even, independent co-working space owners who'd like to capture some of that demand. I'm guessing it's a little bit market specific. Like how
Sure.
does,
It's good. It's a good point, right? Because what happens in New York City is not the same thing that's going to happen in anywhere else, really. But San Diego or other places where it's just a different approach.
yeah,
And the breakdown when I say like a decrease in total office space too, not the same thing. What happens with AI that's in effect San Francisco different than is in effect New York when in the industries that are stationed there, right? Like the banking industry, and you saw, Amex is going to build another tower, World Trade Center 2. Those are huge deals. JP Morgan with their buildings, like those, that's different than the kind of industry you see in Rime and Phoenix or
yeah,
in Nashville and Charlotte and places that have seen a lot of growth over the last 5 or 6 years.
yeah. So how do people who aren't you get access to sort of where that growth is? I mean, I'm guessing these reports you're trying to create, use the word transparency, like some transparency for people around like this is where some of the growth is happening.
Yeah,
So and but that doesn't necessarily, I guess it somewhat speaks to demand, although you have to assume that occupancy is high, right? Like sometimes if you build it, they don't come. So I know that, from my work with operators, like sometimes people just get the locations wrong. And I'm curious, I don't know if you have any thoughts on this. Like some of the data in here is talking about how operators are maybe expanding square footage, not doing additional locations. Do you think there are markets like Dallas, for example, that are saturated? I mean, the share of co-working or flexible office of the total office market is still only 2.2%. So do you think it's like impossible for a market to be saturated or that some are at this point?
Dallas is a good example too. So 2.2%, and this next month's report come out, it's actually 2.3%. So it
Okay.
continues to grow. We're seeing it, right? But they're such a small portion, 160 million square feet out of 7 billion. Dallas is interesting, and I think it was the mayor of Dallas this week was saying how, the idea of like a central business district is going away, and there's more neighborhooding, and
Yeah.
there's more like locality, and that to me is 100% the case. And we're not seeing a lot of new buildings outside of a couple of gateway markets that are in these downtown locations. It's spread out. It's new office buildings, or I call them like jewel boxes, but they're not 800,000 square foot
Yep.
towers. They're 150, 200,000 square foot locations in the perfect location that has demand and is now the benchmark for that area. And you're seeing that in more and more places. When it comes to Dallas, there's a ton of vacant space downtown. Like Dallas has, we study conversion, so like the conversion of office
Mm,
buildings into
yeah.
multifamily, and we actually have rated every office building in the country over 25,000 square feet with a rating on not the likelihood, but its ability to be converted to multifamily. And Dallas, for that type of market, has a lot. And they've seen a lot of partial conversions where you're taking certain floors and making it hotel or apartments, and a lot by, 10, 15, but that's more than most places right now. So to me, we're working on monthly office reports under the Yardi Matrix and Commercial Cafe branding that we're getting out there, and then these co-working cafe reports are quarterly still. But we're working on a process where we can get this information into more people's hands on the co-working side monthly. So we're working towards that.
And is that driven by AI?
A little bit, but a lot of the research, it's supplemented by that, but it's still a lot of manual research. It goes into identifying
Manual
these.
research, but what about the just ability to sort of parse the data and create the reports? Does AI help you do that faster?
Sure. So I'm working closely with Sam Rosen, right? So from Despas,
Yep.
that's a recent Yardi acquisition, and me and Sam are working on how we're getting the data in his hands and how he's working with different an AI tool to show it visually. So that's been something.
Yeah, I mean that's what I just think there's so much opportunity there because I'm guessing you just have like endless data. It's a matter of accessing it and parsing it and right making it usable.
And
So,
it's a lot of data. And what I want to be very specific on too, though,
yeah.
is the data that we're gathering is independently gathered. We have a large team that we can kind of move and adjust in order to get that done.
Yeah.
But our like all the building information, that's independently gathered research data.
Like
All the
dialing
co-working
for
locations,
dollars.
yeah, more or
Like,
less,
yeah,
right?
okay.
It's still it's a lot, and we have different ways of doing that. That are, it's tough to scale, but yeah, no, it's a process. That's why it's taken so long. So
Yeah.
we started building out the database in 2015.
Yeah. Well, I mean, it's another great commitment on behalf of Yardi because I remember, Anat was people were kind of talking about like maybe what's the word I'm looking for? Just the like, okay, the maybe conflict of interest with the stake in WeWork. And he's like, look, it's like a rounding error in our revenue. You know, he was like, let's not worry too much about that. So the investment in the data process is great because it is still because we're talking total number of spaces. It's still, let's see, in the US oh no, we've got 8,854, which is up, up from Q3. So we're moving towards 10,000 in the US, but that's still a pretty small number. I should see
Yeah,
like how many Starbucks are there? It's like,
right, right,
yeah,
right. And the idea is if we're at 2.3% now, I just crossed over 9,000 locations, and the idea is that we see that 160 million square feet grow to 800 million square feet, which is a huge number. You're
yeah,
with a significant reduction in the total square footage of office altogether, it's still 10%,
yeah,
right? It's still 12%. It's a a smaller number when you talk about the whole office industry altogether.
yeah. We're not anywhere close to the 30 that Scott Homa's. I adore Scott Homa, but his clickbait from a few years ago, like 30% by 2030.
But in my take is, I think we're going to see a significant increase in the kind of the serviced enterprise offering in institutional buildings that will get us to a much higher number, right? Like,
Okay.
and I think the new kind of basis point is 10%, 12%.
Yeah.
That's the goal.
Okay. Which is still right. Pretty exciting versus where we are today.
Correct. And I think part of our big push is to I think bring that information to the industry of it still is, 2.2%. It's 2.3% now.
Yeah.
Like there's a lot of room to grow. And, you know, 5x is a huge amount of growth. That's a huge growth.
Yeah.
So the opportunities are plenty.
Yeah. Okay, this might be out of your scope, but I'm really curious. As I was looking through this, I was like, how much time do I want to spend on this? But I was almost wanted to try to do a quick analysis on pricing. It feels so. I started operating in Chicago in 2012,
Hmm.
and my full-time co-working membership was $300, and my dedicated desk was 450. And of course, I had offices. I think that those price points have stayed the same or gone down. Like, do you guys look at that? Do you have any thoughts about
Yeah.
pricing?
So I'd say right now, my main goal has been just the identification of the locations and associating a size to them.
Yeah.
I think we're going to put more information available when it comes to pricing. And again, that's going to be from our commercial cafe website, right? That's going to be from the listings that we're gathering from there. We can
Right,
start to
because you have
aggregate
those
them.
databases in-house. You
Yep.
can just, yeah. Okay.
And there, in the or in the quarterly report, there is a piece on that, right?
Yeah.
But I feel like that's our next step into because we get that question a lot. Like,
Yeah.
great, I know now what the market universe is, but how much are we charging for this? What does that look like? What's the transparency behind it?
Yeah.
Right?
Well, and I think too, when you talk about enterprise use and the growth in that segment, there's not as much sort of, well, you use the term membership, I think, in the report. And I was like, well, what does membership mean? Is that like a seat price in an office, or is that a co-working membership? Is that part-time, full-time? So yeah, more granularity on that I think will be good. I see a lot of data on seat prices, which are obviously much higher in, higher markets, but that'll drive the whole model, for a co-working space or for an asset owner who's thinking about a conversion or an operating partner, like seat price times number of seats is
Yep.
it. So that'll be interesting to kind of get more granular on that.
Understood. Yeah, no, and same page. And I think that's gonna be, like I said, a focal point here coming up.
Yeah. Okay. Good. So stay tuned on that. Yeah, because I'm always like, wow, I feel like, inflation, et cetera, and these prices just kind of don't budge, which I think is interesting. I think office prices, if we looked at that, have probably gone up. Like that's where the movement is. And I think, that'll be interesting. We could start to make some more assumptions about the business model. And, we were talking about co-working versus kind of serviced office and the fact that
Hmm.
a lot of corporate occupiers are looking for privacy, private privacy in terms of maybe a team office, meeting rooms, larger spaces to kind of gather, less on the open membership model where the
Sure.
prices are low and kind of don't move much over time.
Yes, I agree with that. And then I think there's going to be an evaluation just on as you see more buildings sell and as you are seeing a reduction in sale price. I think the last number was it's more than half of the buildings have sold for less than they sold previously. Like that,
Yeah.
that's a significant thing.
Yeah.
So if you're seeing buildings that are selling at a discount, what does that look like for pricing going forward?
Yeah.
And those are things to, I'm not predicting the future on that. It's just things that we're monitoring and watching.
Yeah.
And then how does that trickle down through, traditional leases and then down to co-working?
Yeah. 100%. I mean, another aspect of the report that I thought was interesting is the average co-working site size is 18,000 square feet. Now, markets such as Manhattan and Chicago, you're at 25 to 40. I think that's important, for folks listening. There are a lot of independent operators who will clock in at, smaller spaces because they're testing a market or, maybe the market isn't going to support 18,000 feet. But for me, in terms of thinking about the business model, that's important because 18,000 feet gives you scale. We talked about
Yeah.
service, hospitality. I was talking to somebody yesterday who said like you should not operate a location without two humans in the space. And I was like, well, you have to have the scale to do that. So if you're at 18,000 feet, that's a different level of scale and offering, and you can serve a corporate client. I mean, I think when you talk about demand, the supply that needs to be there is big enough to support teams and to be able to take, the company that says, well, I have 25 people that I want to have come in 3 times a week. Can't do that with 5,000 square feet. So,
And it's not lost on me the fact, for an operator to carry that empty space
yeah,
is that significant. And then that's what I keep going back to in talking about, from the asset owner's perspective, right? And these management agreements and the opportunity to share that as you grow, share that expense as you grow and fill the
Yeah.
spaces up.
Yeah.
But the nuance with such larger spaces in Manhattan and Chicago and the cities versus understandably so, when you get to more secondary, tertiary markets, they're going to be smaller. The thing I always find fascinating too is the number of co-working operators, right? And having 43,000 or 43, I'm
Yeah.
sorry, 4,300 co-working operators for 9,000 spaces.
Uh-huh.
It's still
Very fragmented market.
very much so,
Yep. Yeah.
very much so.
Although I also wanted to point out for any reader who doesn't realize this, you break out the national operators, which I'm looking for here, and a number of them are actually IWG, even
The
though,
brands,
yeah, the brands are listed separately. Now
yeah,
I'm trying to find the brand list, which I cannot find right now.
yeah. We do have that, right?
Oh, there we go.
And
National operators. Because Regis, HQ, and Spaces are all IWG, but they're listed separately, which is fine. I mean, they operate as separate brands, but interesting to note.
sure. And we do the same thing with like the vast brands, right? They're
Yep.
all they're listed separately. And to me, we're something that's unique as well. And then as you see the prices of the real estate come down, and as you see, the destruction in that office value, who purchases the buildings,
Yeah.
and I kind of go back to like the European model where you have more owners of buildings utilizing that space as shared space. And that's another huge opportunity. I think as you see a repurposing, as you see a rebranding, as you see space kind of get flushed through the institutional investment piece, right? And move its way to, okay, I'm going to purchase this building and then position it as what? And I think that's an interesting piece that we'll be seeing more of on the US side, mimicking what you're seeing in Europe. And again, it's not huge numbers, but the percentage of operators who own the space in the U.S. very small
Yeah.
versus in Europe and UK, more for sure.
Yeah. It's a different dynamic. Yeah. Yeah. I mean, that must be fun for you too. You get to sort of the global perspective on what's happening. Okay. Anything else you'd highlight from the report or anything kind of behind the scenes that you'd like us to know?
Oh man, besides the fact that I think that we're, a big push on our side to make more information available, right? I think I made the points that I had when it comes to the repositioning and repurposing. The fact that that doesn't take away from the individual single site locations. I think that's still, a huge part of the movement of co-working. And I think that's really important. And but my piece would be as you see the growth to scale and these numbers, we're talking about hundreds of millions of square feet of office space. That's the sweet spot is in these vacant or underutilized existing quality buildings.
Yeah. Awesome. Okay, well, thanks for doing this work and thanks for being so excited about doing this work and for coming on the podcast.
Thanks for
Um,
having me. I really appreciate it.
yeah, yeah. Well, we're always a willing audience whenever you'd like to share. Everybody just got their industry data update while driving to their co-working space.
That's right.
So, thank you, Peter.
Thanks, Jimmy.